Hey everyone, welcome to this explainer. Look, if you own gold or silver, or honestly if you've just worked your whole life to put a little something aside and you're simply trying to protect it, I need your complete focus right now. Seriously, if you own gold or silver, please watch this before July 29th. Because if you've been watching your precious metals drop recently and you're sitting there with this knot in your stomach, kind of wondering if you made a huge mistake, let me be the very first to tell you, you have done nothing wrong. But there is a massive shift happening right now that's going to affect your savings, and you absolutely need to see this before that July 29th deadline.
All right, let's just lay out exactly where we stand today. Simply and clearly, gold is sitting right around that $4,000 mark, literally slipping close to its lowest level since last November. And silver, well, it's taken a massive hit too, dropping by roughly half since January, down to just under $60. Now, you know, silver gets used heavily in factories and electronics, so it kind of gets a double whammy, hurt by market conditions and the looming worry of an economic slowdown. If you've been watching these numbers drift lower, it's super easy to feel panicked. But seriously, don't.
Okay, so let's dive right into this huge paradox. It's the exact question I know is on your mind. Why on earth is gold dropping when the world is such a complete mess? I mean, think about it. We've got global chaos, the US-Iran war, climbing oil prices, uncertainty literally everywhere you look. And pretty much every single thing you've ever been taught tells you that when the world gets scary, gold goes up, right? It's supposed to be the ultimate safe haven. So why, with all this fear out there, is your gold actually going down?
Well, that brings us to part one, the secret lever.
The truth that nobody on television is really explaining is that what's happening to gold and silver right now, it's not random. It's definitely not panic, because gold doesn't actually move on fear. It's more like a machine, and that machine is controlled by one single secret lever: interest rates. This right here brilliantly illustrates exactly why. Look at the choice for big investors managing millions of dollars. On one side, you have gold. A gold coin just sits there, holding its value, sure, but it pays you absolutely 0% interest. On the flip side, you have government bonds. Because interest rates are high right now, that bond pays you a guaranteed 5% every single year for doing absolutely nothing. So why hold gold that pays zilch when you can safely lock in a guaranteed 5%? Naturally, the big money sells their gold to buy those bonds, and when they sell, the price of gold drops.
And this sets off a macroeconomic chain reaction that is confusing so many people. It's like dominoes. It starts with the war, which pushes up the price of oil. Bam! That higher oil then causes inflation across the whole economy. To fight that inflation, the folks in charge are basically forced to keep interest rates high, and those high rates, they act like a massive, heavy weight just holding gold down. So contrary to what you might think, the war isn't lifting your gold. The war is actually keeping interest rates high, which ultimately crushes gold.
Which leads us to part two, the $39 trillion limit.
Now, I've got to be totally honest with you here. In the short term, that downward pressure is very real. Gold could definitely drift lower still before this whole thing is over because those high rates are holding super firm. But in the long term, there is one massive force in the world, so unbelievably powerful that it will eventually dictate which way those interest rates go, regardless of what anyone in Washington wants. And that force is debt. The United States government currently owes a staggering $39 trillion in national debt. $39 trillion. That is a mountain of debt so gigantic it literally changes the rules of the entire financial machine. Because every single time interest rates are raised to fight inflation, carrying this massive debt becomes wildly more expensive.
So the absolute kicker is this number right here. Every single year, just to pay the interest on that $39 trillion debt, the government is spending over $1 trillion. And remember, that's not even paying down the principal. That is just the interest, purely to stand still.
You guys, this is just pure arithmetic. A country simply cannot afford to pay 5% on $39 trillion forever. There's a hard limit. Eventually, that debt becomes so overwhelmingly expensive that the government will be absolutely forced to bring interest rates back down, whether they've actually beaten inflation or not. Why? Because the alternative is just complete disaster. And as you already know from the secret lever, the day they are forced to lower those rates is the exact day that massive weight is lifted, setting gold completely free.
Let's look at part three, what smart money knows.
This brings us to what I find just absolutely fascinating. While everyday people are reading these scary headlines, getting super nervous, and selling off their metals, let's take a look at what the smartest, most powerful, and sophisticated buyers on the planet are actually doing with their money right now. The Central Bank of China, they have quietly scooped up gold for 20 months in a row.
Let that sink in. 20 months without stopping. That includes their biggest purchase in almost 3 years. And get this, they made that massive purchase while the price was falling. They were aggressively buying while everyone else was terrified. And it's not even just the government. Regular families in China bought more physical gold in the first 3 months of this year than in any period ever recorded.
Now, looking at the broader global picture, the World Gold Council recently put out some data showing that 89% of global central banks, we're talking nearly 9 out of 10 here, expect to buy even more gold in the coming year. The institutions that literally manage the savings of entire nations, yeah, they aren't looking at scary daily headlines. They're staring at that $39 trillion debt, and they're doing exactly what wise people do, buying the one asset that cannot be printed and has successfully protected wealth for 5,000 years.
And hey, it's not just overseas central banks making these moves. Massive American financial institutions are seeing the exact same writing on the wall. Bank of America recently told its clients straight up that this dip in the gold price is a prime chance to buy. Fidelity, one of the biggest investment firms in the world, just predicted that the gold bull market is going to return next year. The absolute wisest buyers out there are already positioning themselves for the day those rates are forced down.
Which brings us to part 4, the July 29 decision. So you now understand the machine. You know it's all about interest rates, not fear. But there is a ticking clock here and a very specific date you need to be completely prepared for. In just 9 days, on July 28th and 29th, a small group of people known as the Federal Reserve are going to sit around a table in Washington, and they're going to make a decision on interest rates that will directly move the value of your savings. Right now, the experts are basically split perfectly down the middle on whether they're going to raise rates again. And markets? Well, markets absolutely hate not knowing, which is exactly why gold is just stuck in place at this very moment. So here's your cheat sheet for that exact day. Seriously, watch the news on July 29th. If the Federal Reserve signals that they're finally done raising rates and the inflation fight is winding down, that is fantastic for your gold, and you might see it begin to lift almost immediately. But if they signal that more rate increases are coming, expect some short-term pressure, and gold might stay a bit heavy for a while longer. Either way, you'll now actually understand what you're watching, instead of just staring blankly at confusing headlines. So I'm going to leave you with this one critical question. I've watched these markets for a really long time, and the people who end up losing are always the ones who panic at the absolute bottom, sell what they really should have kept, and then just watch it recover without them. Now that you understand the machine, and you know the weight of interest rates on gold is only temporary, because that massive mountain of debt will eventually force rates back down, are you going to panic sell over a few scary weeks, or are you going to stand firm like the wisest central banks on the planet? The choice is entirely yours, but at least now you have the facts. Thank you so much for joining me for this explainer, and definitely keep a very close eye on the 29th.